Hello and welcome to ATFX's US CPI data preview. Didn't think I'd be saying that for a while because that US government shutdown has really cut out the amount of US data that's come out in the last few weeks. However, most investors have largely shrugged that off. US stocks are back to all-time highs. We've seen gold smashing up to higher levels and the dollars remain relatively firm as well. Treasury yields coming back to slightly lower levels, but still everyone relatively back in ranges. However, if the shutdown continues and we do only get this sporadic data, expect concerns to accelerate. Good news is the Bureau of Labor Statistics is putting out CPI data out this week. It will be heavily focused upon because we haven't had some of the key data that we were expecting to get in the past few weeks. We are fully pricing in a Fed 25 basis point rate cut next week. That's on the back of a much weaker labour market that we've had over the last few months. But inflation, and this is the data that we're getting on Friday, is still looking relatively perky. And if that comes in stronger than expected, we could see some sharp corrections in the market. So let's have a quick look at the expectations that we've got for the data. And once again, as I said, it is creeping up. The headline CPI year on year is expected to come in 3.1%. And the month-on-month number, 0.4% increase. That's up on 0.3 last time. Data's looking still relatively perky, I feel, and way above where the Fed would like to see it, but they're still happy to ease rates at the moment. If this number comes in hotter than expected, expect those chances of a rate cut in December coming back as the Fed may be far too wary, especially if we're not getting data coming out. What we're going to do later in the video is we're going to have a quick look at some of the key components that should move fairly hard. We will see equities move on the back of it, but from a currency perspective, we'll have a quick look at euro, we'll have a look at dollar yen, we'll have a look at cable, and we'll also have a quick look at gold. Who can stay away from gold at the moment? Looks like it's punching up to fresh highs. So I had to start off with gold, didn't I? It has been a fantastic move. Bulls are loving it. It is a gold rush. We're over 25% up from this break back at the start of September. Peaked out just beneath $4,400 an ounce, and it looks perky and it could challenge that again. We will be expecting some sort of a reaction on the CPI data. If it comes out stronger than expected, if we see a 3.2, 3.3, expect the dollar to get bought and gold to retrace. But given the current trend at the moment, it's probably just going to give buyers better levels to buy. Conversely, of course, what could happen if we get weaker numbers and the dollar sells off, it could even accelerate this move further. At these elevated levels, you're probably going to be looking to buy highs, buy breaks of highs, stop losses under previous lows because it has been so sharp. And as you can see here, I've got trend lines coming in, but they're way off. Even this sharper one, we're trading at just above 43.50 at the moment. Trendline support comes in just below 4,100. Massive moves in gold. It will move on the back of the data, but at the moment, that trend is certainly to the top side. Here's euro. We've actually been trading relatively range bound for the last week or so. That's interesting given that uncertainty we've got on US data. Currently trading in the middle of range. We're kind of expecting it to be around these kind of levels in the next few days. Support now comes in around 115.87, and these lows, there's a couple of lows around here, 115.40. A stronger number will see these levels challenged, and a break to the downside does open a way. I've got initial levels down here. You can see these lows around 114, and then the 200-day moving average around 112.70 at the moment. So potential for big moves. A weaker number locking in. We've pretty much got that 25 basis points locked in. It could be locking in December and the start of 2026 as well. Expect to see a break of resistance levels around about 117. The high there, 117.30, and a break up towards 119. So here's this dollar yen chart. And as you can see, massive break the other week on political updates. New prime minister coming in. It saw a massive weakening in the yen. Huge moves on the first day. A break of those highs at 150 took us up to just above 153. We're back around 150.50 at the moment. A little bit of consolidation, but I left this former resistance trend line in. Look how well it behaved as support. I'm going to still keep those kind of levels in. It's interesting when you get these gapping markets. Resistance is going to come around these highs, and this trend line resistance around 154.40. Support now near these lows, 149.40, and then down here around about 149.20. 200-day moving average. Same again. bigger number, a 3.2, a 0.5, a 0.6, expect these areas to be challenged, and dollar yen will move and move hard because we're looking for interest rate differentials. Downside, a 2.8, a 2.9, lower than that. We will see these challenged very, very sharply, and then we're going to be looking down at 140, 147.80. Over to the sterling chart, and as you can see here, nice little bounce, similar pattern to what we've had in the euro. But the interesting thing with cable is we've got a couple of technical lines coming in nicely. If we're down around here, it will give traders a good opportunity to trade, with the bulls looking to get long ahead of this trend line support, this previous low, plus the 200-day moving average. Obviously, the bears will be looking for a break. Those bears will flood into the market if we get this higher. I still think I'm leaning towards the skew that we might get a nasty higher number, which could really throw the market a bit. I feel the higher number is going to get the bigger market reaction, especially if we see some breaks in FX. That'd be the euro and probably cable to be favorites. Conversely, of course, if we do get that lower number, it really does take us into this rate cutting cycle into 2026, and I think it might open us up for some nice trends to the top side. Resistance now, that high is 137.26, trend line's 137.50. That's going to be the target level for cable. So that's pretty much it. Massive event on Friday. Plenty of trading opportunities out there. As always, if you haven't subscribed to ATFX's channel, we'll keep you up to date with all the data and non-data, as the case may be, and keep you up to date with everything that's going on in financial markets.